Hey guys, it is Julie here with JT Wealth. In today's video, we are going to discuss an exciting new way to invest in SPACs. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are discussing SPACs or blank check companies, which have been one of the hottest investment trends over this past year. But with so many SPACs popping up this year, how do you know which ones to get into early in order to avoid missing that big pop-up when they announce their merger? Well, today we're going to take a look at how you can invest in multiple SPACs, both pre and post merger, without having to hold and manage 50 different funds yourself. Yes, we are talking about SPAC ETFs. We have 3 ETFs we'll be looking at today that have all opened up within these last few months and are fully focused on investing in SPAC companies. So just before we jump into those 3 ETFs, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out some of the great links down in the description. This includes a link to Webull if you're looking to open up a new investment account for whatever reason, and they are giving away 2 free stocks for signing up and funding a new account. Plus, if you're transferring over more than $2,000, they will reimburse up to a $100 transfer fee. All right, now let's get into these SPAC ETFs, starting off with the SPAC and New Issue ETF, SPCX. This company highlights that SPACs are one of the most exciting and disruptive capital market themes over the past several years. Along with an increase in the number of SPAC IPOs, larger deal sizes, and high-profile sponsor teams are drawing investors to this once underflowed market. However, with little research and information available on publicly traded SPACs, investors are often left wondering how they can efficiently access a market that has traditionally been dominated by institutional investors. The solution? The SPAC and New Issue ETF is the first actively managed SPAC ETF. SPCX gives investors exposure to a broad portfolio of SPACs with the familiar attributes of an exchange-traded fund's diversity, tax efficiency, and liquidity. Taking a look at their top holdings, we can see the number 1 position is held by CCIV, or Churchill Capital Corporation, followed by Starboard Value Acquisition, Cohn Robbins Holdings, and CC Neuberger Principal Holdings. The SPCX fund is still quite new as it just opened up on December 16, 2020. As previously mentioned, this is an actively managed fund, and it does have a gross expense ratio of 0.95%. Currently, there are 77 holdings in the fund altogether, with net assets shy of $117 million. Since its inception back on December 16th of 2020, the SPCX stock has seen growth of about 23%. The second ETF that we're taking a look at is the Defiance Next Gen SPAC-derived ETF, SPAK, or SPAK. Now, SPAK was actually the first SPAC ETF. The Defiance SPAC ETF says that picking the winners of individual SPACs can be very difficult. However, the ETF structure allows investors to access the most liquid SPAC IPOs in a diversified basket. SPAC allows both financial advisors and retail investors to participate in an IPO private equity style of investing, which is usually only available to large financial institutions. Now, a 60% weighting is applied to IPO companies derived from SPACs, and 40% is allocated to common stock of newly listed special purpose acquisition companies, ex-warrants. In their top holdings, we also see CCIV Churchill Capital Corp, but also some more recognizable names such as DraftKings, Open Door Technologies, Pershing Square Tontine Holdings, and Virgin Galactic. The SPAC fund has an inception date of September 9th in 2020 and an expense ratio of 0.45%, currently with 137 holdings, a net asset value of about $68 million. Now, this one is a passive, rules-based index tracking the performance of new blank check companies from the Index SPAC and Next Gen IPO Index. Since their inception back in the fall of 2020, the Defiance Next Gen SPAC-derived ETF has seen returns of just shy of 22%. And the third ETF that we're taking a look at today is the Morgan Creek Exos SPAC-originated ETF. or SPXZ. Now, this is an actively managed ETF, as they say that active management is important. Historically, SPACs have experienced a very wide range of outcomes following business combinations, and they believe this should continue in the future since a sponsor has an incentive to do a bad deal rather than no deal and lose their equity. As a result, they believe investors should be careful about passively holding all SPACs, and that Exos has extensive experience in all aspects of this. SPXZ provides broad exposure to a selected cross-section of the largest pre- and post-combination SPACs by market capitalization, and they target equal dollar weights so that no one company or group of companies will have an outsized effect. And you can see that reflected here in their top 10 holdings, as their number one position held by Virgin Galactic isn't even 3% of their portfolio, compared to above 9% in the first positions of the other ETFs. In their top 10, we have some other very recognizable names like Denomir Scientific, Lordstown Motors, Adapt Health, Open Lending, and DraftKings. Now, this SPXZ ETF is basically brand new, as they just launched on January 26th last month, so 2 weeks ago. They currently have assets under management of $21 million and 87 current holdings. And in those couple of weeks, they've actually stayed fairly neutral and are currently down 0.2%. But we do know that it has been an interesting time in the markets lately. So there we have 3 different SPAC-focused ETFs that will give you some great exposure to a wide variety of SPACs without you having to do all of the research and managing yourself. Now, you guys know I always love hearing from you, so please let me know your thoughts on these SPAC ETFs in the comments down below. Do you like the idea of being able to invest in SPACs through this method without having to go out and source all of these unheard of SPACs yourself? Let me know what you think. And keep in mind that these videos are never a suggestion to buy or sell any specific stock or ETF and are just meant for information and entertainment purposes and to bring some new options to your radar. Any investment decision needs to be made based on your own research and due diligence. Now, if you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. Have an awesome day. Cheers.